Here and jump into what family offices are looking for in terms of their investment. And we do think there's a big opportunity for angels and family offices to work together in a whole variety of capacities. DJ is going to highlight some of the ways that he's seen entrepreneurial family offices looking at real estate, private equity, looking at deal flow. So we're very excited to have him with us here. He's been very supportive of Kretsu, originally from West Seattle as well. He's got some roots here in the Northwest, so we're very hopeful to get him back here a little more often with us. So, DJ, thanks so much for coming out, being with us here. Go ahead and get the presentation queued up here, and then after DJ's done, we're going to roll into our real estate panel, which DJ is going to moderate for us. Just a heads up on the logistics. Our housekeeping crew is going to come through kind of row by row, pick up the boxes, any trash that you may have, so just be aware of that. We're going to come through kind of row by row, get things tidied up as we proceed into the afternoon. So, DJ, are you live there on the mic? Yep, sounds like you're ready to roll here. So, if everybody could, again, join me in a warm round of applause here for DJ. Thank you.
So, as a show of hands, you guys can hear me okay? Because I can hear. Okay, good. How many of you are sponsors or operators? Raise your hands, just so we get an idea. How many are investors? Okay. So a lot of the things that I'm going to go over today are going to be things that you've heard earlier before. Nathan, you were talking about, and Linda was talking about a little bit about having professionals come in. And one of the big things that families do, because they don't understand necessarily the different type of investments, is what Howard said, where they're actually looking for a family that created their wealth in one specific area and piggyback off their expertise, right? Personally, if I was going to go out and invest $200 or $300 million, I would go and find a family that created their wealth and say, can I invest next to you? Because they've been through it, they've been successful, they've had their own money at risk. And so that's really a great place that families like to start. So a little bit about myself. I'm on my third family right now that I've worked for. The first family, he sold a yogurt company for $1 million, and he turned that into $600 million. The second family, I was then headhunted by the family that created Giorgio Perfume, if anybody's heard of that before. And now I'm doing some work with the Monfort who own the Colorado Rockies. A little background about myself is that, one of the things that I really dove into was that, families have gone their whole life and they get this, they're working in one industry, for example, and it might be the chemical industry. And then all of a sudden they sell and they've got all of this wealth that they've come into. Well, they don't understand private equity. They don't understand real estate. They don't understand hedge funds. And here they are left with all the various monies and what to do. And then they run into a situation like Linda spoke about where they either hire somebody because they trust them but don't necessarily understand the investments side of the business, or they end up hiring somebody in-house that can help. So I did go through and I created a bunch of areas that helped with education purposely, from the Family Office Institute to a quarterly publication for the magazine, wrote a book. A lot of the podcasts will interview people and actually go through and try to direct information, what they can learn from, and then did the first study of its kind on family offices and real estate, which just came out, and that was quite interesting for what families have been investing into, what they haven't been investing into, and some of the things that they look for, which is very important because there's been nothing in the industry, at least on the real estate side, that gives peers to know what the other families are doing, and so that's really been something else. So from my perspective, I started in the 90s as financial advisors, and then helped build out a retail distribution channel, worked with institutions like Carlisle and Apollo, and then have been working with families. And the biggest thing that I can tell those that are working with sponsors or operators is that family offices are much closer to the average retail investor than they are institutions. A lot of times people think, okay, here are very successful people, and at least I did, and they've gone out, they've created all this wealth, but yet they don't have the parameters or the box on where to invest into. And so a lot of times it's, they're learning as they go. In fact, I met one gentleman who did sell a chemical company for $400 million, and we're having a conversation, and he gives me his card. And it was the best thing, because I looked at it, and actually what he said, as his title was Investor in Training. And that's exactly what you get a lot of times. And so as the market is evolving, so is the focus and the types of real estate, the type of investments that families are investing into. And this was brought up a couple times today. I mean, family office continue to grow. It's in the media an awful lot, talking about what they're doing, etc. And Camden Wealth estimates there's about $7 trillion that wealthy families have, and that they're actually investing. And then you've got a lot of money that will be changing hands into future generations as well. So where are family offices currently investing? So this is from Camden. Camden does probably the best total study for any, on a global basis, of where families are investing into. And you do have a lot in the private equity, direct investments. Real estate investment was at 17. With the report that we did on families in the U.S., the number actually for last year going into this year was about 33% were invested into real estate. So they had a much greater amount of money that was in that area. And private equity funds, hedge funds, which I know you guys do a lot of work in, Nathan, that continues to grow. And like Howard said this morning, that is going to continue to go from there. Now, the average portfolio in 2016 was 3%. And that's for a family. 2017 was 7%, which is a number that a lot of people were very surprised at. And then 15.5 in 2018. So there's obviously been an increase. A lot of families think that there is a recession or something that's going to be going on, so there's definitely been a lot more conservative of where they're investing. And same thing in the real estate study. Last year the average was 14%, and this year they expect to get 14% as well. So the portfolios have been doing better, but the number one thing that a family will say if you start to work for them, or if they're hired, and Linda I'm sure can attest to this, is they say there's 3 requirements for you to work here as a CIO or handle the investment matters. Don't lose money, don't lose money, don't lose money, right? So they want to make sure that their investments are there for the long term. And a few stats that people are very surprised at, and actually I'll ask you guys, do you know how much money actually is lost by the second generation? Anybody? 70%. What about the third generation? 90%. The Vanderbilts, right? She just died recently with no money and really didn't pass anything on. So that's an issue that is relevant for these wealth creators that created it. And there's a number of reasons for that. One is because when they weren't actively involved in the wealth creation, they don't necessarily understand what it takes to create that wealth. And in fact, just a side story, I met a family the other day, and he came into the office, and I go, so how are you doing? Not so well. And this was like a third generation person. I said, why is that? He goes, I just lost $800 million. That's crazy. So, investing and where they invest is extremely important from that perspective. Now, we've already talked about what a family office is, but I want to just touch on this really briefly because I think it's very important. One is a lot of people say, I'm a family office. There hasn't been really a definition of a family office, and some of us, we've talked about actually putting a definition out there, but it's really made up of 2 areas that I'll say. One is similar to hard costs and soft costs. You've got the hard issues, and then you've got the soft issue. The hard issues are the investment, right? What you're investing and where it is. The second area are the soft issues, and Kip did a great job of talking about this. Linda did a great job of talking about this. And this is dealing with all the other issues outside of the investment. You're dealing with transition planning, estate planning, governance, right? Back office and banking. And all of this makes a big determination of how families invest because they've got different issues to deal with. They've got the next generation to deal with, future generations, right? They might have some infighting. If anybody watched Succession on Showtime, I think, or HBO, great show. And it shows you really an insight into what a lot of families, they've got infighting, etc. And that makes a big difference of what they're investing into and where they're investing into it. And so, in fact, from the study that we did, one of the things that was quite interesting is that it said that the next generation really didn't want to get involved in the family office. Didn't really want to do much. Well, all of a sudden you're given $100 to $300 million and you don't understand what's going on with that money, and you know, what do? I met one person down at an event down in Florida, and I said, so what do you do? And she's a Pilates instructor, which is great, so obviously great shape and everything. I said, so I'm here with my family, I think I need to learn some of this. Of course, she was there for half a day and left. So those are the things that are really being dealt with. Now, what defines a family? There's two different things, and this is important too because I'm just going to touch on it really quick. I look at it from primarily one area. If an investment is being made, it's from their personal pocketbook. You might have a business pocketbook and a personal pocketbook. The family office, it really needs to come from their own personal capital with what they're doing. My first family office, they had a foundation. They had a ton of employees where they created their wealth in real estate, but everything was being written from his personal pocketbook. Now, a lot of times families will have an operating business and they operate out of that office. But it still has to be that it's actually their own personal capital, and they are dealing with a lot of the issues within the family. Now, a lot of times you get people that say they're a family office, and we'll talk about that here in a second on whether they really are not. But there's really three classifications of family. First off, one is at the smaller shop. They don't have too many people in there. They'll outsource everything. Typically not good at due diligence. In fact, in our report with real estate, that's been one of the biggest areas, which is what Nathan and I were talking about, is that it's really important that you've got that due diligence to sort of help you get through that first stage. And that's why a lot of families like to work with other family offices. The second area, like Linda was talking about, they bring in expertise, and those are people in certain areas that can actually help with those investments, but it needs to be much larger. In fact, the number for a family office is really, and we were talking about this last night, many people say is if you have a net worth of $250 million or more. And when you're going to start hiring people to bring in somebody, one person, you really need to be worth between $500 to $1 billion. And that's because you're also dealing, and you're going to be dealing with a lot of these soft issues that I mentioned as well. 50 million, you're very wealthy, but you're high net worth. And that's okay, that's no problem. But the larger money that you have, the more holistic that you have to look at. And then the very large families, which are $1 billion and more, will have a whole team. Michael Dell's office, they got multiple offices, multiple people. It's very, very big. They don't write a check for less than $20 million. They're going to do something, it's got to be a minimum of $20 million, and they like to invest next to you, not with any promotes, not with any fees, just like what Howard was saying earlier, and they'll do that. So Michael Dell, Bloomberg's a similar situation where they've got all these different professionals, and so it's the bigger places. And families, like I said, like to work with others. So a multifamily, simply they work with many families all at once, just so that we're clear and on the same page. And a lot of times they're going to charge two ways, either a fee on assets or they'll charge a flat fee, which I actually like, because that way they can make pure, impartial decisions and say, I don't like the deal, don't do it. Well, they decide to do it anyway, who cares, right? Because you're getting paid flat. The one thing is that when you do run across, and I think this is sort of important to bring up, is that it's fine if you're handling just the investment component, but if you're not handling any of the soft part of that, you're not a family office, you're an RIA. And that's okay. And I bring that up to the operators because a lot of times people say they're a family office, but they're just managing the money, which is okay, but when you're talking to the family, you want to make sure that you understand where they're really coming from. Because once again, when you're dealing with a lot of the soft issues, then there's going to be different things that you have to be aware of, which is going to impact how they invest, what type of investments that they go into, because they've got other issues to look like or to go after. So some family offices has an investment committee. Some of them they don't. They really don't understand the various points of the investments, and they just don't have the expertise, like I said. So that's something that they need. So that's whether it's a financial professional, whether it's Keuren who can help with the due diligence and sort of screening these processes. It's very, very important, but fees is always a thing to be aware of. So, what do they look for in their investments? Club deals, like to piggyback on expertise. Sweet spot for a real estate investment is 8%, where they can get 15 to 20% IRR over 3 to 5 years or cash flowing. Now, what's important here is that when you look at the study that we did, there was two things that sort of were contradictory. Families wanted to be investments 3 to 5 years, but they want to hold their investments for 10, 15 plus. That typically doesn't coincide unless you build something, refinance out, get your money back, and hold on long term. But they sort of want to have their cake and eat it too. Second thing, trends have been over the last couple of years in real estate been moving toward debt so they can have a first position and they don't have to worry as much about the market, and so they're looking to get interest on it. And then the focus for family offices primarily are wealth preservation, generational wealth, and tax benefits. Tax benefits is one of the biggest things that family looks for. And does anybody know what a 1031 exchange is? Very, very few families do 1031 exchanges, which to me is very interesting because it's one of the best tax programs that you can actually utilize. And my old patriarch deferred about $250 million in taxes alone. And he just kept rolling it and rolling it. But not a lot of families are aware of that, even though tax consequences are important. And the other thing, millennials. Millennials, the future generations, I was having somebody, we were talking about impact investing that I was sitting down with earlier. And she's talking about that and everything else, and I'm like, I don't care about that. I want to know the returns, right? From my perspective, I need to make sure that I'm getting the returns that I'm supposed to be getting. A lot of the patriarchs, it's the same thing. It's the millennials that are more about saving the planet and everything else, which is great, because we need that. But from an investment perspective, you really need to understand who you're talking to, because like I said, the older generation, they're just focused on returns. I'm not going to be around forever anyway, so that's what we need. For those that are working with families, you just want to remember this is a relationship business. Keep it simple. Keep in touch. Usually, they'll start with a small investment. It does take time, and families' offices, which I think, Nathan, we're going to talk about, they do want deal flow. That's one of the biggest things is deal flow. I'm going to go through this here really quick and go to the last part. This is working with families. So what do they want from their investments? They want to make sure you're making a good decision. They want to feel comfortable with their decision. They want to know who they're investing with and who's behind it. They don't want to feel sold. And if you notice, I'm not saying any specific industry. I'm talking just in general. We're not talking about a return, but they want to feel good. A lot of it is based upon trust with what they're investing into. Once again, it comes back to investing with other families, which is a big thing, so that they can, allocate accordingly. And Nathan, you said you got a couple questions you want to go over, right?
Check. Round of applause here for DJ. I think it's very helpful to see kind of the combination of perspectives from each of our speakers here as we've gotten started and we're kind of pulling together. Our next set of items will be some panel discussions, where again we'll get to hear from family offices directly, get a chance to hear their perspectives on it. It's been our experience over the last 20 years when you're dealing with kind of new and emerging things that are coming together. There's a lot of allocation, a lot of interest. Everybody's got kind of a different way of talking about it and a different way of looking at it, and you get a lot of different answers if you ask a number of people the same questions. So we try and kind of cross-connect the dots. And so DJ, it'd be great if you could talk. You know, we've got a lot of entrepreneurs and angel investors who have portfolios they'd like to, you know, obviously have family office backing. You know, we all would as entrepreneurs having that kind of support as fund sponsors as well. Can you talk a little bit about maybe some of the best ways or some of the not so best ways to that you've seen, you know, be successful? Obviously, there's a lot of events, there's lists, there's different newsletters. I mean, ultimately, it feels like you got to put the time and effort in to really focus in on it, but maybe share some of your experiences and what you see not work and what work.
Yeah, and I had some of those, et cetera, for what people say. I get emails, probably a couple LinkedIn a day that says, here's a deal. You know, basically, write me a check for 10, 15, 20 million bucks. I don't know who you are or anything like that. Like I said, and what I came up with on that last slide that you guys saw was, it's relationship based. Right? You need to take time to build these relationships to get to know you, right? A lot of times investor or family office will start small. Some it's 200,000, some it's 2 million. But they want to see what it's like to work with you. And so you do want to take the time, you want to build that relationship, and you actually want to make sure that they've got a good understanding. The other thing too, as I would say, is because of all the issues they might be dealing with, I would ask to try to get an idea of what they're looking to accomplish. Because I think that's, you know, I think that's important. And also, where did they create their wealth? Because if they created their wealth in one specific area, in biotech, and you're talking about biotech, it's probably a good conversation to have, you know, as a whole. Are there any questions?
Yeah, we got some questions from the audience here, so I'll do my best to.
And that's the biggest thing, guys.
I'm here. Impersonation here.
I'm here for you as well, so please, any questions you have, it can be anything in the family office space, and I'm here to answer.
Thank you so much. Can you hear me?
Yep.
Thank you. So one of the themes that kind of ran through Linda's presentation and your presentation is that all this needs to be treated like a business, right? All the recommendations you're making around getting the right people around, I mean, that's all, if you were Microsoft and you had money to invest in a new product, you would be doing the exact same thing. At the same time, all this wealth has been generated from operating businesses. So why, in your opinion, is it as soon as it becomes family money, it kind of loses the business connotation, and the services that you're providing, Linda, you guys are kind of bringing the process, the kind of corporatization back. Why do you think that's happening?
Well, and we were actually talking about that, Linda and I was talking about that last night at dinner. And it's amazing, because this is a question I've asked numerous times, is that you built this big business. You've got systems, processes, control. You've got people in place, right? Because you're only going to grow as good as your people. And you got parameters and goals and objectives. Family offices, it's like, once they get this full amount of wealth, it's like they forgot all of that. There's no investment parameter, right? I don't want to pay for the people to come and help. You know, there's no plans. The biggest thing that I can tell you is because it becomes emotional, which is why I say that family offices are more like a retail investor, because when you're investing, if you don't have a lot of money, you've got to be very careful. Oh my gosh, I lost my money, right? Where before it was not emotional, it was a business transaction. Even if you do commercial real estate, when you go to buy your own personal house, you're feeling a little different about this. What's it going to be like with my family? Do I like the area, etc.? I think that's the biggest thing. One of the things that I've really taken from working for a number of patriarchs also is that they will take into consideration what you're suggesting, but at the end of the day, they're going to do what they want to do. It's their decision, you know? And unfortunately, you end up coming back mumbling, I told you so. But, you know, you can't come out and say that. I think it's because it's personal. Because to create that amount of money, it's like when Madoff happened, a lot of that money was lost. You're not going to make that back in your lifetime.
Yeah, it is interesting because you got a family business, been around for 100 years, all the wealth's been kept inside the family company. Okay, now the next generation isn't interested. They may want to position the company. So then they spin out a bunch of the wealth, and that's when the challenges happen. Yeah. There's a lot of people that can help special. But again, it's about setting up a structure having a corporate structure and continuing to run it like a business, not just a bank account, I think is the key takeaway here. So we got some more questions here.
I was just gonna make another comment. It's not mutually exclusive. Remember, we talked about culture fit. So running it like a business and having the technical and the processes and procedures, make sure you know nobody's taking the cash out the back door. That's not inconsistent with the fact that the values and the traits that these people bring as well are high EQ, strong empathy, total service heart. It's your money, not theirs. They are totally committed to serving you and to helping you and your family accomplish your goals. So the fact that it's run like a business doesn't mean it doesn't have a heart, because in fact the people who come to family offices, and I'd say some of the culture fit characteristics that are uniformly applicable to all, are they must have that service heart. No ego, it's outside the door. It's your money, not theirs. They are driven and motivated to help you accomplish what you and your family are looking to accomplish. And that includes for many your legacy, your philanthropy, and everything else, as well as, and the social, human, and intellectual capital that they were talking about before. So it's not inconsistent. It just says you can't be loosey-goosey and wind up losing it.
Yeah, and that's why when you hire somebody like Linda does a great job at, they're not emotional, right? So they're looking at it differently.
Any other final questions here for DJ?
Just one more comment. Part of the challenge that you're facing is, especially with the business owner, if he's waking up Monday morning and he doesn't know he has a job because he's just transferring everything over into the family office, you have to help him understand that as a family office, he's even broadening it out. The original family business can be held by the family office, but now he has an opportunity to actually go start another business. So part of what you have to do is convince him that there's a whole new bunch of opportunities out there. He's got all these wonderful business skills, and if he's entrepreneurial, he likes starting new businesses. So now if he can shift the family business to being operated by either one of the children or maybe somebody else, he now has the time to go start all over again.
I think the other thing too, one of the interesting parts of the study that we did, and if you guys want a copy, let me know and we can send you one, was that the investment strategies and allocations are different in the foundation than it is in the other, they're personal. And quite honestly, a lot of that, my conclusion is that it's because there is more of a parameters around that, right? Because I'm giving away my money for whatever thing that I care about. We got to make sure they look at it more as a business and not as emotional as a whole. Any other questions? Well, thank you guys. If you have any questions, like I said, feel free to ask me tomorrow, later tonight. If I don't know the answer, I can definitely introduce you to somebody that can help you from another family office. But I'm happy to help in any way that I can. So thank you very much.